not. I wouldn't honestly. I wouldn't even say that they are at least A rated because then you're saying that they could be the lowest of the A rated. I would just say like these are some of the top carriers in the country.
Yeah,
Mutual of Omaha alone is one of the top guys.
Yeah.
And a lot of these companies are actually worth more than some of the big companies that people normally go with. People
yeah.
want to get life insurance with AAA, Allstate, Farmers, State Farm, and none of them have as much money in the market as these people do.
That's a great point right there.
Yep. Yeah. Good point.
Yeah.
So
Plus not only that, but this is all regulated by the state. So there's no way that that you can that anything can and like all these companies have to be regulated by the state and they all have to be able to prove you when you took your exam you have to be able to prove that
solvency.
so insolvency. Yeah, there's solvency requirements for all these carriers.
Yeah,
If they couldn't prove that they had the funds to pay out on the claims, they wouldn't be able to sell insurance.
absolutely. So I think well there's opportunity. So how many companies total does GFI if we maxed out and appointed with every single carrier, would it be 25 or 32?
I think it's closer to 32 now. They keep adding new partners. When I first joined, 25 was a number thrown around. I think it's closer to 32 now.
Okay. And I guess my question about this section right here is like, I mean, I don't know much about Ethos. I don't know much about Sequoia Capital and our
So,
and our symbiotic relationship with GFI. Like what can you guys
so here's if you guys want to if you want to write down like points to hit when you're doing this, you
yeah.
ethos, when you explain ethos, you want to make it seem like we're cutting edge. That's the main thing with ethos. So
Yeah.
so like as Christian just explained, the companies are, there's over $1 trillion right here on this screen, right?
Okay.
And it is extremely regulated. There's no funny business at all.
So, but what does it mean in partnership with Ethos? Does it mean that GFI is like partial owner of Ethos, or they have a
no. It means this is one of the carriers.
Oh, okay, okay.
Yeah. So Ethos, why they're special is because they underwrite via AI. That's why it's cutting edge. And people may think, oh, well, that's kind of new. I don't know if I trust it. And you pair that up with, yeah, well, two of the largest venture capitalist banks in the world recently acquired Ethos. So this is, and it's true. This is the way of the future.
So this is what you're talking about, SoftBank and Sequoia Capital.
Yes, I think
Well,
I really believe in 2 years, most carriers are going to have like a no medical product. Foresters already has it. Ethos has it. Mutual of Omaha has it. I think everyone's going that direction. And Ethos was the one that pioneered that underwriting via AI. They pull medical bureau records. They pull driving records. They pull credit, a bunch of other things to make a decision, and it's instantly.
So
And no medical exam,
Sequoia
nothing.
Capital and SoftBank are owners of Ethos?
Yeah, they got acquired by Ethos. So and those are huge banks. I mean, everybody's kind of heard of those.
Okay.
So the first thing you want the client to walk away with is number one, our company's cutting edge. So it's when you think of financial planning or life insurance, you think of old white guys, right?
Right.
This kind of makes it sexy. That's the idea to bring to this. The second thing is you pair that up with the founders, which is the old white guy stuff,
Yeah.
right?
Yeah.
Like, hey, on top of that, what we're gonna do is like I want you to pretend like you're talking to me, training Chris. So you're saying, hey, John, Chris is your friend. He's actually getting trained by myself, and we're taught from the founders of this company. There's a combined 100 years of experience on how to do this stuff, along with having a cutting edge technology platform, along with the rest of our carriers are A-rated Fortune 500 financial institutions, like Chris said. This
Okay,
is
so the founders part is GFI founders.
yes, yep.
Okay.
Hmm.
Okay, cool. Because this is I when I was talking to my sister the other day, I was telling her I was like, everyone that's in the upper executive market in GFI are all people that come from insurance companies and
Yeah,
different
yep, yep.
yeah,
investment.
like what John means by founders have 100 plus experience. You have to think about it like we have other people coming from other companies, especially like the president of GFI is he was president at Ethos, right, John? Where he was vice
Yes, Marty
president.
Yeah,
Schaefer.
yeah, that's what those are kind of the little tidbits that I kind of need to
So
know.
like that guy's been has been in this industry for probably like 20 to 30 plus years.
Yeah, 30 plus. They got Joel Justice. Bro, he was a CFO of Bank of America. And they got him to come over here as a executive one of the executive offices. I forgot what it is.
Yeah.
But yeah, the idea behind this whole thing is cutting edge. We're getting trained by the best of the best of the best carriers. You got to front load this hard. I know guys like me and you don't really care about this, but if you front load this hard enough, if I'm Christian's uncle and Christian's just joined and you're training him, I'm gonna walk away and be like, damn, bro, like what company my nephew joined? This is sick. You know?
Yeah. Okay. Okay. So yeah.
That's what you want. That way, when it comes down to collecting their bills, their income, their data, all this stuff, it's a lot more easy. Once you've established all this stuff first. If and you've already found out if you don't do this on the front end, it's gonna come in the back, and be like, I don't know if I want to do this. What company am I with? I saw their reviews, all that
Yeah.
stuff.
Yeah, well, I thought this whole screen was for the credibility of the carriers, not GFI, so it makes sense now.
Mm-hmm.
So basically a good little synopsis of this part is, well, so you said you're the client, Chris is the trainee.
Yeah, so let's just take it from the top. Chris, can you this is being recorded too. So can you please do your best to edify Bobby because that's important. Greet
Yeah,
me, edify Bobby, pass it over to him, and let him take it away on that first screen.
yeah, no problem. All right, hey there, John. How you doing?
Chris, good to see you. Pretty good, man.
Hey, how's your day going? Pretty good.
Yeah. I'm good, man.
Yeah, man. Well, I wanted to on behalf of Bobby, I wanted to go ahead and I wanted to thank you. Well, actually, hold on, let me go again because it's in reverse, right? I'm edifying Bobby.
Yeah.
Bobby's the trader, yes.
Yeah. All right. Oh, hey there, John. How you doing?
Pretty good, pretty good.
Hey there, brother. So just like we talked about on the phone, this is just a little bit of information about what we're doing now. Like I told you before, it's just for your learning benefit. Hopefully, if you get anything of value from it, we definitely love to help you. But I have my trainer Bobby on the line right now. Bobby's actually one of the top guys right now. He's doing a lot of great things, helping a lot of families, and he actually helped me with my own financials. I got everything put together, and I started a plan with him and I thought it might be something that you would be interested in. So I'm gonna let Bobby take it away, and he's gonna
All right,
continue
hold
with the
on.
rest of the presentation.
Hold on. Don't say it's something you'd be interested in. You really just want to greet me, say you're in training, and just edify the shit out of Bobby. Like he's the best, he's the best, he's the best. Don't make it sound like I gotta buy anything though.
Okay.
You know what I mean? Otherwise the walls are gonna start going up. But try it again.
All right. Hey there, John. How you doing?
Hey, pretty good, Chris. How you been?
Doing good, pretty good, man. Hey, thank you so much for taking this meeting. I really value your opinion. I have my
Yeah.
trainer Bobby here with me. He's actually been doing this for a lot longer than I have, and I'm in training right now. He's showing me the ropes. He's one of the top guys. He's been helping a lot of families, even helped me with my own personal finances. And yeah,
Cool.
it's just he's just here to train me. Thank you so much for taking the meeting. I'm gonna let Bobby take it away.
Perfect.
Hey, John, I just wanted to say thank you for meeting with us today. I know everything's on the go and you're busy, busy, busy. So I hope
Yeah.
that you get some sort of education out of this. And as far as Christian goes, he's one of our bright young our new business partners. And what I really want to teach him is, I really want to teach him how to provide solutions for families and how to make people feel at ease with their finances. So I hope you get a little bit of education with this. There's no obligation to buy anything today. So if you don't mind, I would just like to tell you a little bit about our company and our philosophy.
Great. Only thing I'd add to that
Yeah.
is referrals. So you want to tie them down early. So you want everything you said was great. Like,
Yeah.
hey, because you went and edified Christian back, which I
Yeah.
wasn't sure if you knew that. So yes, perfect right there. And then you set the expectations. Hey, I'm going to share information with you. I hope it impresses you, and gives you value. And I really want to raise awareness for what the trainee is and get some referrals out of him from the people he cares about most. He says he really values your opinion. Fair enough.
Yeah. Yeah. So how do you say? You say like, if you don't get anything, if you see value in it, if you see value in it, maybe you could refer. You can understand what Christian and I are doing, and maybe you can
Yes.
send us some people that might need help in this industry or something like that. Or
Yeah, exactly. Like, hey, we want to raise awareness, and he's with us. I'm showing him how to represent our company, and we hope to impress you, give you some free information, and possibly get some referrals out of you. That's what's on the agenda today. Just so you know, just so we're upfront about it. And you sometimes I add, sometimes not. And I say, if you see something you think you like, we'd love to be the ones to help you, but there's no obligation.
yeah,
Boom, and go
cool.
right into it.
All right, excellent. The company that Christian just signed up for, and he passed his test. Wait, did we go into that much? That much?
Yeah, that sounds like too. So say, hey, he's either he just passed his exam or he's in licensing. He's about to get contracted with these institutions.
Okay.
Boom, boom,
Yeah.
boom, boom.
So Christian joined. Christian and I are part of this company called Global Financial Impact. He just passed his test, and we're in the process of getting him, fully appointed with a lot of our carriers. And so I just want to show. I'm showing him how to represent our company. And but first, I want to start off with the name of the company so you're aware of who we're both representing.
Great.
Have you heard of us before?
No, never, never.
Right. Yeah, we are a little bit of a newer company, but like I said before, our the executive branch of our company is backed by a lot of former financial executives with over 100 years of experience, and we're bringing cutting edge technology toward to our customers, and a technological platform and a very hands-on platform as well. If I
Cool.
may, I want to show you a little bit about some of the companies that Christian and I are working with. We are in partnership with Ethos, and the reason why have you heard of Ethos before?
You know what? Yeah, I think I got hit up on online. I got advertised to them
Yeah,
by
they're
them.
the cool thing about them is they're more so a technology platform, and they're bringing cutting edge technology to the insurance business and to the financial sector, and we're seeing a lot of innovation there, and then nicely they were just acquired by Sequoia Capital and SoftBank, who are worth over 185 billion. So that company, that technology financial company, is backed by some of the two of the largest banks in the world. So. And as I was saying before, the founders of GFI, a Global Financial Impact, do have over 100 years of experience. We have a lot of executives that have done 20, 30 plus years with different banks and different financial companies out there.
Yeah.
Uh, do you recognize any of the companies over here on the right?
Yeah, I recognize John Hancock. I think I saw Lincoln Financial Group on there somewhere. American Equity. Yeah, a few of
The ones with the good commercials, right?
them. Yeah. The ones
Yeah,
they
I feel
advertise
like
when you're golfing.
Yeah, I feel like when you see those commercials, you don't think anything about them until
Yep.
you actually see these companies get in action. But the reason why I bring it up is, Christian and I, that's what we're working on. We're working on getting him appointed with all of these carriers, and GFI is in partnership with these carriers. This is kind of what these carriers give us a different variety of solutions to our clients and their financial situation. So, do you have any questions about any of these carriers at all?
Okay, that's very good. Stop right there.
Yeah.
You did better than I thought you were gonna do.
Okay.
And the only thing I would add, like cherry on top,
Mhm.
is would just be to tie it to him more. So like because in this case I'm like his uncle, right? I care about
Yeah.
my nephew. So it's like when you do ethos, hey, they're cutting edge technology, $1 billion, blah blah blah. Your nephew's gonna be appointed with them and be able to do business through them pretty soon. You recognize any of these? Oh yeah, well your nephew's gonna get contracted in about a couple of weeks and be able to put together plans for their institution. As I'm sure you saw the commercials. He's getting trained by this, and just keep tying it back. It,
To
it,
him.
it it's like a fight. You're just gonna keep jabbing them in the mouth with this with their loved one
Okay. Okay.
until they, till they get it. But yes, that was good.
Abs-
Chris, why don't we flip it? Let's do Bobby's trainer.
Yeah.
And Bobby, start by saying hi to me and edifying Chris.
Wait, who's trainer?
Chris is trainer now. You're the trainee.
Okay.
So you gotta just edify, say hi to me, edify Christian.
Okay. Hey, John, good morning. How's your morning going so far?
What's up, Bobby? I'm doing good, man. I'm doing good.
Hey, I know you're busy, so I appreciate you taking the time to sit down with us. I wanted to introduce you to one of my business partners and one of my trainer mentors, Christian here. Christian's kind of guided me through the way in the process of my new business, and I'm really excited to join him. He's taught me a lot, and I hope that he can teach you a little bit about what he's teaching me. Christian does have quite a few years of experience not only in the financial market, but as well as the property and casualty market as well. And I'm looking forward to really working with him and him showing me the ropes.
Nice. Let's go.
Hey there, John. How you doing?
Chris, nice to meet you.
Hey man, yeah. Thank you so much for taking this meeting for Bobby. He's one of our shining stars here. He's doing really good. And we're here just kind of trying to spread awareness so then people can kind of see a little bit of what he does. I love for you to kind of keep that in the back of your head as we go through this meeting. If you think of anybody that you wouldn't be opposed to him meeting and that could possibly use this information, we love to show it to them. And if they're interested in anything or they see value in anything, we definitely love to help them. So if you just keep an open mind about that. So first things first, our company's called GFI. That's Global Financial Impact. Um,
Okay.
go to the second slide. With Bobby joining us here at Global Financial Impact, actually, before I go into it a little bit, I kind of want to go a little bit more of a little bit of a deeper background on myself. I've been in this industry for about 10 years now. When I first started, I didn't really know a lot about finances, especially because I'm first generation Mexican.
Mm.
And as I joined this industry and I learned more about finances and how to properly protect families, I kind of got really into it, and I actually like one of the biggest things that I try to do personally is try to educate first generation Mexican families so then they could reach their American dream and get in a better financial situation. And now that Bobby is working with us, he's actually about to once he gets his license, he's actually going to be in partnership with Ethos, which is one of the most cutting edge. They're actually on the on one of the Forbes fastest growing companies right now. They're actually backed by some of the biggest venture capitalists in the world, including Sequoia Bank and SoftBank. Pretty much, they're worth about around 185 billion. He's learning. He's going to be learning from a lot of the founders here. They have like over 100 years experience. So not only is he getting the top of the line technology, he's also getting the wisdom of the people that have been doing this for years. I know that you can see all the companies on my screen right now, and I'm pretty sure that you recognize a couple. But these are actually all the companies that Bobby's going to be able to work with. They're all like it's going to be around 25 plus companies. They're all A rated, and I'm pretty sure you've seen them because they're in the Fortune 500. Probably seen them at a basketball court or at a golf game. Do any of these look familiar?
Yeah, yeah, yeah. I see those when I play tennis.
That's right. That's right.
I didn't
As
know
long
first generation Mexicans play tennis.
Let's start with our Chris. You actually did amazing.
Yeah,
And Chris
exactly.
reminded me, my fault, Bobby. I forgot. The way when they CFT test you on this to sign you off, before you get into this, you want to say your 2 minute success story within a minute or two, and that's what
What?
Christian did. So you need to find something. I would make it as authentic as possible, which you're already on board for. I know that.
Yeah.
And like the reason why you joined the company and the impact it made for you. So
Okay.
I'm a big entrepreneur guy. So like I share like, hey, you know what? I found this company. I found I can make a difference in my life and I could help our communities, but then I could also teach people how to make, an extra 50 grand, 100 grand without going into debt for a degree, with all those kind of things. And we're doing a good thing for our families, for our communities. You kind of do that
Yeah.
after he edifies you, after you edify him back, you edify yourself. You go into,
Yes. Got it.
yeah,
So in my case, I would probably say something like, "Hey, hey John, thank you for joining us. A little bit about my backstory. I've been with GFI for a little bit less than a year. I just really I got licensed and got appointed with this. And what I'm really the reason why I got in this business because I've done taxes for over 5 years, and I was really interested in finding tax shelters for my clients. And
mm,
I work with a lot of lower income people in my tax business, and I realized that there's a lot of people aren't educated about their retirement, about their finances, and about how to make some passive income. So, I got a little bit of passionate about it. Christian actually gave me the opportunity to join him. This would be backwards, but
yeah,
uh,
yeah,
I've been doing it for a little less than a year. I've found some decent success, and I found a lot of it feels really nice when you get to help somebody solve their financial issues and help them retire in peace with the peace of mind. So
yeah,
I'm
for
really
sure.
enjoying this, and we're hoping to get Christian, on board and getting started so that he starts helping families the way I've enjoyed it so much in the past year or so.
Yeah, yeah, let's go. You guys feel how strong that is? It's way stronger
Yeah,
than even
yeah.
though like once I started doing that, it changed.
Genuine is genuine. Yeah,
Yeah, yeah,
just like you
because
said, be genuine.
and that's what we're talking about the other day because you may feel like you're not too good on the emotional side, but I just heard you be good at it.
Yeah. What do you
You know what I
mean?
mean? Because you were saying like, yeah, I'm more logical, I'm more left brain, this, which I live in the numbers too. But when you can combine the numbers with what you just did, that's a powerful thing because you're kind of
I
hitting them
feel
on
like
all
it's
sides.
easier to do that when you have an actual client. When with trainers, it's like I just want to get through this shit. You know what I
Well, you know what? I
mean?
I think I think it's opposite because when I'm with a client, it feels weird edifying myself. And then I can say the 2 minute success story still. But if I'm with, Chris, if you're Christian's uncle and Chris is just edifying me and I'm edifying him back, and I say why I've been doing this and I'm connecting all these things to him, it's easier for me to close.
For me, I feel more nervous now than when it's the actual client. So like, I don't know what it is. It's backwards.
Yeah, yeah. You just want to do good for the training. That's good. But yeah, this like I'm sure you guys could feel the energy. It's way better. It's way better doing it that
Yeah.
way.
Okay. Yeah, I agree.
But
You want me to go to slide 3?
yep, let's do it.
Okay, perfect. So John, so we we just want to show you a few of the financial basics and what our philosophy is at Global Financial Impact, and the philosophy that Christian is also adopting for himself as well. Have you heard of the 3 rules of money before?
The three rules of money. I've never heard of that.
Okay, so that's what we're here for. And like I said, I appreciate you listening to what we have to say. But first, I want to teach you a little bit about the rule of 72. This is basically how interest compounds. Just for time's sake, if you were to give me $10,000 and you won the lottery and you gave me $10,000, if you put it in your savings account, do you know what percentage your savings account's going to give you?
Probably negative. I gotta
Yeah.
pay fees in there.
Well, if you think about inflation, that's true.
Yeah,
Uh,
yeah, for sure.
so most savings accounts are about a 1%. If you look at the next slide, you'll see it about a 4%. Those are typical of like high yield savings accounts, CDs, different bank products. But if you notice here, if you divide the percentage, what is it?
72 divided by 1.
Yeah, so if you divide 72 by 1, you don't double your money until 72 years. At 4%, you divide it every 18 years. So you divide 72 by 4, and your $10,000 that you won in the lottery is going to turn into 20,000 in about 18 more years.
Mhm.
So those, nobody's saying anything bad about those things. Those are accounts when you're savings that are very fluid. And in CDs, they're not, you have to lock them in for at least a year. But what our goal is our goal at GFI is to, take somebody that has some money, take somebody that has money that they're willing to look at and try to double it a little bit faster. So
Cool.
the average for the last 100 years is right around 8 to 12%. Our goal is to get you anywhere from 6 to 12% a year.
Mhm.
Obviously, the last couple of years you've seen investment strategies skyrocket to 15 and 18%, but that's not really typical for a 100-year average.
Yeah.
That happens during economic booms. But as you've seen in March, there was a little bit of an economic bust and the stock market tanked, and a lot of people lost a lot of money. So our goal is very safe and conservative. We're trying to get you somewhere in between 6 to 12%. If you won $10,000 in the lottery, and we're able to accomplish an average of 6 to 12%, how would that make you feel?
Yeah, man, I feel great. I want 12% all day.
Yeah, absolutely. And that's the goal. Secondly, I want to show you a little bit about how money grows. There's a few different ways. And, as we talked about in with your, your banking account, your checking or your savings or a CD, uh, that looks like this. That's what we call fixed account. So in your savings, you're getting about 1%. And you sock away that $10,000 in your savings account. It's very liquid, but it's going to take 72 years. The point of those plans is for them one is for them to be fluid, and second, banks are covered by the government. But most retirement plans are not covered by the government. Most people in their 401ks or in their IRAs, they have a little bit of a different approach to it. Most people are in what we call a variable market, and a variable market is something that we think is great. But what what the downside of the variable market is that if the stock market tanks like it did in March, you can lose a large portion of your the money that you set aside for quite some time. So we don't think that it's a bad idea to invest in the market, in the variable market, but we think that the foundation of your retirement should be in something a little bit safer. Uh, what do you think about that?
Let me stop right there for this part. It's I like it because I'm this way.
Yeah.
But I know for clients, you're gonna want to get a little more tugging at their heart right here. An
Yeah.
easy way I do it, where there's not too much talking, is I say, hey, fixed account. You just said, sir, that you're not earning anything, right? But most people put it there for what? Why do you put it there? Let them answer. Oh, because the
Yeah.
money's there. Yeah, that's why. Um, and when you're explaining variable, I always ask, like, do you know somebody that's been impacted by that? And let them say, no, but I've heard about it, or yes, or whatever. Yeah, our company can make a difference there.
Okay.
Here's indexing. This is a strategy we have, and that person could have saved a
So
huge.
we want to emphasize the market loss aspect of it. And
Yeah. So you want to do that, and to get some interaction from them, try to tie it to something they personally experienced if you can.
okay.
hmm
Excellent.
Uh, but cool. Let's Chris, let's have you start that. Let's do the first two rules.
All right. All right, hold on, give me a
This
second.
is going good, guys. It's going better than I thought.
Are you doubting me, John?
Never.
All right. Yeah, like before I can really get into about everything that Bobby does. This is something that we like to do with all of our presentations. We like to go over something that's called the three rules of money. Has anybody ever gone over this with you?
No, never.
Yeah, that's usually the answer that we get. Probably like 90% of the people that we do these meetings with, they never heard of this before, which at least you're coming out with some extra information. So the three rules of money are pretty simple. It's how does your money accumulate? How do you protect it? And then at the end is how do you pay the government? Because the IRS always has to get paid, right?
Sure.
Okay, perfect. So then the first rule of money is actually called the rule of 72. This is actually something that Albert Einstein called the seventh wonder of the world. He actually said that this was kind of like a mathematical marvel because it kind of shows you how it kind of explains compounding interest. Have you ever heard those terms before?
Yeah, like if I put in money, I earn some interest on it, right?
Correct. Yes. So I'm pretty sure you've heard of, I'm pretty sure you've seen accounts for like 1%, right? Like a 1% savings account, or not even 1%. Like sometimes Chase offers like half of 1%, right?
Yeah.
So let's just say that in a perfect world, that bank account actually gave you 1% instead of the normal 0.5%. Then if you put in $10,000 at the age of 29, your money will double in 72 years.
Wow. Okay.
Okay. And then now if I get now once as the percentage grows, all I have to do is divide 72 by the number and the percentage, and it'll tell you how long it takes you to double your money. Like you can see the examples right here. If you're at 4%, your money doubles every 18 years. 6%, it'll double every 12 years, and then 12 years it'll double every 6 years. Which one would you rather have?
12, man, all day.
Yeah, exactly, right? Yeah, so we like to explain this to people so then they could understand how compounding interest works. So then whenever they like if whenever they have an account or they have a current investment strategy, they can see realistically how their gains are actually going to work. Which actually leads me to my second part. Like you remember how I mentioned those savings accounts?
Yeah.
Yeah, so those are called fixed accounts. So that just means that the percentage never goes up, never goes down. You just get a flat rate of whatever the bank gives you, which we already mentioned it's less than 1%. And if you're like, I know like if your money's only going to double every 72 years, can you think of a logical reason why someone would want to put their money in an account like that?
I don't know. Other than the money's there. They need it for rainy day.
Well, yeah, but then at the same time, you might as well just put it under your mattress because inflation's
Yeah.
3%.
Yep.
Point.
And then the second way that people have their money grow a little bit is through a variable account. It's where it's tied to the stock market. So it goes up and down as you're investing it. I'm pretty sure like every time we do these meetings, we at least hear one story from someone that somebody knew somebody from 2008 when everything crashed and they lost either their retirement or their investments. Is that something that applies to you or somebody that you know?
Yeah. I mean, personally, my 401k, I saw a, it went down pretty drastically in that year.
And how did it feel? Were you stressing? Did you feel like you lost your shorts?
You know what? No, I mean, I was in my 20s, so it's not like I was trying to retire or anything, and it's recovered a little bit since then. So, thank God.
Yeah, and a lot of people that a lot of people that was the case, but for most of the people it wasn't. There was people in their 60s that were about to retire, and then it happened, so then
Yeah.
they had to go back to work. How would you feel if that was something that you had to do? Like if you were ready to retire, and then now you can't retire, and you have to go weigh people at Walmart.
Man, no, thank you.
So, so that is one of the biggest issues that we're facing in America right now, especially with a lot of people that we talk to, which is why the third option is actually very important. It's an indexed account. So it's a little bit different than the first two that I mentioned, because these indexed accounts, you get to benefit from everything as the market goes up. You get to get all the benefits, but none of the drawback. Because and like you'll always go up, but if you ever have an off year, you just flat out, and you don't lose your principal, which is which kind of helps our customers not only one, be able to take advantage of the market, but two, it also helps them keep a peace of mind, and know that they're not going to lose any money in the process. Is that what do you think about that? Is that something that you think is beneficial for people, especially considering yourself that you lost money when you were in your 20s?
Yeah, yeah, I never heard of something like that.
Yeah, because imagine you lost money in your 20s. Imagine if you just never lost it, and then you just kept growing it anyways.
Hmm. Hmm.
Because the market went down about 36%. What if instead of 36% it was zero, and then you just kept growing after that? You probably have a lot more money right now, right?
Yeah, yeah. Good, guys.
Okay.
Let me tell you the way I say these two, because I think it needs to be a little more simple. We all know a lot about this, but you're gonna run into clients that are kind of airheads, right? And it might be going over their head.
That's kind of
Here's
one of my that's kind of one of my biggest issues.
Yeah, yeah, yeah. Because you sound real smart, but it might not connect with them. So this is the way I make it simple. Rule 72. Hey Chris, you ever heard of three rules of money?
Yeah, yeah, yeah. If actually, no, I never heard of it in my life.
Okay, well here's what I wanted to add some value to you. So at least you walk away with knowing how money works. I wish it was taught in school. I have a degree myself. This was never taught in school, and I wish I was taught how money works. So the first rule is accumulation. How's your money going to grow? And a lot of people think it's just like an adding game. Thank you, baby. Sorry, my daughter came in. A lot of people think it's just an adding game. Like, hey, if I invest $100 and I make 2%, now I have $2. But it's really a compounding. Imagine if a seed is planted and that seed grows and it lays 10 seeds. And then those lay another 10, and those lay another 10. You get a forest a lot faster than just adding. It's a multiplication game. So here's some easy
Oh,
math. Whatever interest you're getting or paying on a loan, if you divide that number by 72, that's how long it takes the money to double. Chris, you like to gamble?
I love gambling.
You look like a gambling man. Tell me if you take this wager. If you earn $10,000 and you put it in the money, let's say you want to be responsible. You're like, hey, I don't want to spend it. Put it in the bank. Banks give about 1%. So I just told you, you divide 72 by the percent you're getting. How long would it take you to double your money on what I just told you?
72 years.
Yeah, 72 divided by 1. What if I'm giving you 4%? How long would it take you to double your money?
72 divided by 4, 18 years.
You're right. It shows it right here. The next one shows 6 to 12%. And this is pretty decent investing. What I want you to see, because I know you can do the math now. This one doubles every 12 years. You start with 10, you end up with 80 grand. You see that when you're 65.
Yeah.
Look how much more you have over here when you're 65. You see that?
Oh, yeah.
I like to highlight this because six is just double a 12. You would think you just multiply that 80 by 2 to have double, but it's not because it's compounding. That's what I want to show you the difference is every single year your earnings have earnings, and those earnings have earnings, and those earnings have earnings. And people can get to their goals a lot faster when they take advantage of this. Most people don't know how to take advantage of this.
Okay.
Cool. Second thing is, hey, if I'm gonna be earning all this money, what do you think the average Joe's fear is of putting money in the market to earn interest like that?
Oh, to lose it, obviously.
Yeah. So here are your options. You can put it somewhere where you can't lose it, a bank, but you can't really earn money either. You can't take advantage of all this that we went over. Second
Yeah.
option is you can put it money into something like a 401k or the stock market. And you just said most people are fearful of losing it. What if I were to tell you there's a hybrid of these two and you could earn stock market like returns without the risk? You can't lose your money.
I would say it's too good to be true.
Cool. I'm gonna send you guys this recording too, so you have all this. You can make it your own.
Yeah.
Um,
Right.
cool. Let's we got like 10 minutes. Let's do tax, Bob. Let's do the tax part and I'll have Chris do it and we'll wrap it up.
Okay. Uh, John, do you understand when you put your money out in the market, how or when you put your money in a savings account or a bank account or in the out in the market, do you understand how money gets taxed?
You know, I really don't. I know they just sent me a big bill at the end of the
Yeah.
year.
Well, I mean, that's kind of what my passion is. Like I told you, I have a little bit of a tax background, and my goal is to legally reduce people's taxes the best way I can with a good strategy. But I want to
Mhm.
talk to you a little bit about the different types of accounts out there, that some of them that are tax now and tax later. With tax now, you have brokerage accounts, mutual funds, savings accounts, bank CDs. That's all money that you're paying taxes on out of your check now. So it's coming out, you're liable for the tax. Secondly, what we call is tax deferred or tax later. Those are kind of like the work accounts, like the 401ks and the 403bs. Have you heard of those before?
Yeah, yeah. I have a 401k myself.
Okay, and that's very typical for a lot of work accounts. You also have IRAs and annuities and pension plans. Most of these, the government allows you to take your money and they'll reduce your taxes now on that money, but you're going to pay taxes at retirement. So, do you feel
Mhm.
like with the way things are going in the country, you think taxes are going to be higher or lower when you're 65?
Good. Yeah, it has to be higher. We're trillions of dollars in debt.
Yeah. And so remember what I said, most people have their money in a 401k. Why do you think the government lets you do that?
I didn't know that. How much does it get taxed?
Yeah, I mean, it's going to be based on your tax rate at the time, and most people are at retirement earn little bit more income than when they're in their 20s. So their
Mm.
tax bracket is a lot higher, and that's why the government says, "Well, we'll let you compound this interest for us." Okay.
Wow.
So,
Wow.
we're going to let you grow your retirement, but when you take it out, if you pull out a little bit too much, we're going to take our cut at
Hmm.
65. So, and then the third thing is tax advantage, executive bonus plans, cash accumulation and insurance policies, and Roth IRAs. Out of these, most people have only heard of a Roth IRA, but they're also kind of very hush hush. Have you heard of any of these other type of plans?
To be honest, just the Roth IRA, I don't know too much about it, but that's the only one I've heard of.
Yeah, so basically what that says is that you're also gonna pay taxes on your money now, but you're not going to pay taxes on the compounding interest. So you remember back up here, when we talked about at 65, you have $640,000.
Yeah.
Remember that?
Yeah.
Well, your interest is compounding. And what our goal and what I'm trying to teach Christian is how to have that money at the age of 65 or whatever age you'd like to retire and not have to pay taxes on that. Does that sound a little too good to be true?
Took the words out of my mouth.
Yeah, so but that's sort of the philosophy that we've adopted at GFI, and what I'm trying to teach Christian and what he's going to be showing his clients. If that's something that would benefit you in one of your retirement goals, do you see any do you have any questions about that?
I mean, to be honest, I don't even really know exactly what I have, how it works. I just know to take money out of my check.
Yeah, well,
Um,
remember what I told you. My mission is to try to legally reduce people's taxes
mhm.
uh, by using the code. This is what a lot of companies and a lot of wealthy people do when they get up into the upper echelons of income. They
Good.
basically put their money away into a place where the government can't touch it. So that's why
Mm,
you hear about, oh, well, they're not paying their fair share. So,
mm,
and
mm.
our goal and my goal is to bring that to, remember I told you I work with a lot of lower income people, and my goal is to bring this education to the populace so their finances can benefit the same way those wealthy people are investing their money. So if you
Great.
If you yourself or if you know anybody that, is facing these potential tax liabilities at retirement, would you feel comfortable referring them to us?
Yeah, yeah, all day. All day.
Absolutely. So do you have any questions about tax now, tax later, or tax advantage?
No, very good on the tie downs. I like that. Like I said in the beginning, this business is all tie downs. So
Yeah.
you're probably gonna, if I were to let you go through the whole thing, you probably ask him 3 or 4 times if he's open to sending referrals, and then when you finally ask him, he's ready. So
Yeah.
that's perfect. I like the something you probably like saying. The company chairman says it, Matt Welsh. He says GFI brings Wall Street to Main Street. So that's kind of the same thing you're saying. You work with a lot of lower income, and they don't know these strategies. They don't have access to it, maybe. So perfect, perfect. Chris, why don't you hit phase 3?
All right. All right. Yeah. So now that we already went over how do you accumulate money and how we protect it, well, like the third rule that we went over, John, where we're going to go over how it's taxed. Obviously, we do have the accounts that get taxed now. These are your savings accounts, your mutual funds, bank CDs. These are things that get taxed almost literally instantly. And then there's also some things that are tax deferred, some things that take taxes a little bit later. I
Mm-hmm.
know that you mentioned you had a 401k and an IRA, and there's also IRAs, annuities, and pension plans. But I know you mentioned
Yeah.
that you had a 401k. Were you aware that when you take it out, you're going to be taxed on that money?
No, no, I had no
Yeah,
clue.
that's actually, yeah. Whenever we talk with people that actually have 401ks, they usually most of the time they think they're ready for retirement because they're like, oh, I have 500k in my account, but they don't take into consideration that as soon as that money is going to be taken out, they have to pay the IRS.
So I'm
And
not
then
paying the IRS currently already. That's what you're saying.
no, you're currently not paying the IRS. The taxes are going to be charged later on when you withdraw your money.
Got it.
And I don't know about you, but do you see taxes going up or down within the next couple of years?
Man, I wish they'd go down. They've gone up every year.
Yeah, exactly. So yeah, it's one of those things where you kind of think about like, why would the government be okay with this? Like, one, I could get market loss, and two, I also have to get taxed on the money later. It makes no sense.
That's great,
Yeah,
Chris. That's great.
yeah. We also have so the third option is we have and this is kind of where the realm where Bobby's going to be doing a lot of his work in is we do tax advantage accounts. These are like executive bonus plans, Roth IRAs. These are accounts where you pay little or no taxes. It's tax advantage. So we help you pay the least amount in taxes. So then you could take so then you could get the most benefit from from the compounding interest that we were originally mentioning. Now, I know that you currently are tied down with your 401k, and I know that I gave you a lot of information, and you probably might be telling yourself right now, like, it's tax advantage, it's index, and I'm getting returns of 6 to 12%. Like, it sounds too good to be true, right?
Yes, it does.
Yeah, well, it sounds too good to be true because you never sat down with a financial professional. Now, I know you have a 401k. If I could protect your money from financial loss and I could guarantee you returns from 6 to 12% and get you tax advantage, like how much would that be worth to you?
Worth a lot. I love that. I just want you to say it later. And Bobby kind of did that too.
But
Reason
we
why,
should say guarantee though, right?
guarantee what?
We shouldn't guarantee 6 to 12%.
No, 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 because it's index. So we can guarantee zero, which I
Okay.
mean, sounds weird, but because anywhere else you can't guarantee zero. You can't guarantee anything.
Well, the annuities, I don't know if you've seen the annuities have MIGAs. You know what those are?
No, what is that?
So they're the annuities are I don't know what MIGA stands for, but
The bonus?
it's something annual guaranteed account.
Yeah,
It,
yeah, like
Yeah,
FNG.
the North American NAC Control X has a 4% floor.
yeah, they're
A
4 or
4% floor?
5%. Yeah.
Yeah, it's a four
Oh my
percent
God.
floor, yeah.
Well, I actually think that it's not even a floor. I think it's kind of like putting your money in like a CD as well. Because
Yeah,
some of the MIGAs and the annuities have 5%, but it's
Ah,
guaranteed
but
5% though. Like like
that's sick. Yeah.
yeah, like it's not a floor. You're actually guaranteed that money like a CD.
yeah,
Wow.
that's what
Wow.
the when the North American rep went and talked at GFI, he called it a 4% floor.
Let me see.
Yeah, he said it's a 4% floor and it participates in the index, but that's only for NOS Control X.
Just to finish up the training before we go there. I know we got Vince coming on in a couple minutes.
Yeah.
You guys should go for the ask after the menu. Reason why is because you're hitting with education, right? Education, and you're kind of like honing in on it, and it kind of gives them some relief to get no ask out of that, right? And when you're doing the client service menu, you all know how to do that pretty good already. You're like, hey, I'm training Bobby. Bobby can do college funds. Bobby can protect retirement accounts now. Next one.
This one, right?
Bobby can get people out of debt. Bobby can protect people's homes. Dude, on a side note, guys, this 50-year mortgage, I mean, we kind of know what's going to happen, right? Most people are going to get one, and the mortgage is going to outlive them. Everybody should get a whole life or term insurance product on that. I'm willing to bet insurance carriers are going to have a 50-year term coming up because of that. And that's an easy way to make sure the bank doesn't end up with the house and it goes to the family trust. Like
Yeah,
that's
those
something I take
50-year
you from a
mortgages
bank.
are crock of
Yeah,
bullshit, man. And I
yeah.
can't believe it.
It is, and I really see it. Like we can be the front lines protecting it from going back to the bank just with a simple policy, you know.
Yeah.
But you go for the ask after all this, and you say, hey, you like this. This is actually everything I want you to walk away with. Did you find value in this? Yes. You said you're open to sending Christian some referrals. Is it okay if we maybe take a few name and numbers down, or you can just make an introduction? It would mean the world to him. We don't got to sell him anything. We need him practicing representing the company this way. They say yes. After you get 2 yeses like that, then you say, hey, I know we mentioned your 401k and this and this and this. I believe we can make an impact there. Are you open to letting us looking at it? It's we have to do a separate meeting, but we can see if it makes sense for you. And then you guys go for it. The ask should come right here. By the way, I want to do this slide too, Bobby. If you guys can review that before our next meeting, and you can pull this up right here, and there's a script if you want to read it, just so you know the talking points.
Okay.
Yeah.
Because it's lately I've been going here, and it's been adding some value for clients. So cool. Let me text Vince.
All right. I'm gonna make a couple of phone calls, John.
Yeah, that's cool, Chris. Handle your
All right,
thing.
Chris.
Later.
Thanks for hopping on with me, man.
Later, guys.
Yeah.
Ugh.
We stop the recording.